Welcome, everybody, to the Genesis Mindset. Today is Mobick Monday, and I'm going to be again talking about Bitcoin, and I'm going to be talking about the global liquidity. So I'm going to reference back a chart that I referenced a few videos back a few Mondays ago, and then also show that in the context of the liquidity in the world and why I actually think, and I still believe, and of course, this is not financial advice, it's just a personal opinion. I still believe the cryptocurrency market is very undervalued and it has a lot of upside potential. But why Bitcoin might not necessarily be the play? Everybody thinks Bitcoin is the safest one. I actually think, in a way, it's almost the least safest because of the low upside gain that you're going to get on it. Just my opinion. Some people believe very differently. This is simply just my opinion. So, with that, I'll get into the screen share. Okay, here we go. So it was from this chart here. So this was from Real Vision, and it was showing the global monetary index. So this is the total liquidity index and how the liquidity has grown over the years. And it goes through these 4-year cycles, and these 4-year cycles align with the cryptocurrency charts. So if you have a look at this here from 2012 up to 2024. And as a matter of fact, what I'm going to do is I'm going to show this as well. So just give me a second. Oops. So what I'll do is I'll actually show you the chart just to drive home the point. So these are not exacts, but it gives you an indication. So this is all about, all these things are called indicators for where the market could go. So if we look here, it goes in 4-year cycles. The top of this particular cycle was around 2014. So this was the total liquidity index. The start of 2018 and the start of 2022, and the next one should be around 2026. So again, middle of 2014, start of 2018, start of 2022, and 2026. So if we look, if we look at how this actually works with the Bitcoin chart. Oh, bugger. So here's the Bitcoin chart. So I'm going to have to adjust it just so my head is out of the way. This is also what I was talking about, the S-stop. It actually, if you look here, it starts here. This was its first cycle. So it lasted from the start of 2019, basically towards the end of, or to the middle of 2011. So that chart shows it from 2012. And if you have a look at here, remember it was the middle of 2014. So that was around here. Bitcoin topped at the end of 2013. So it was actually this price leads that. So in other words, this has a top before that global liquidity index chart has a top. Same thing here at the end of 2017, whereas it was the start of 2018. And then this one was I guess this was really the top here. So really towards the end of 2021, and that showed towards the end of towards the start of 2022. Now, the next global liquidity index top is going to be 2026. So somewhere in here, which means if we follow everything that's happening, we're going to have a top probably, I'll make that a little bit darker. We're going to have a top. And this is all if things just follow the same linear progression, which the market is getting smarter. So this is the problem. So we could have a top. Everyone's saying 2024, 2025. We could also even have a top now. Nobody really truly knows. This is also, you can see it very clearly here, the S curve adoption that I was talking about. So this idea that as the amount of value that enters into Bitcoin, it needs more new users and more new value to keep growing up. This is the problem. So then if you can see it. So the curves basically, it really starts to flatten out, which also makes the price flatten out. And then this could be a point where it starts toppling the other way and it never gets as high as this, like what we've seen with gold. Now, again, all of this is just indication. None of this is 100% to be taken like a fact, because if it was a fact, then everyone would just be doing it and we'd all be killing it. These are just called indicators. So people are using information like that GMI to indicate to them where the market could actually go. So because this has so much value in it, its potential upside is a lot lower. This is why people go with altcoins. This is why I really like Mobick, for example, as my Bitcoin play, because it uses the same blockchain technology as Bitcoin. It's a fork of Bitcoin. So it's a copy and paste of Bitcoin. So it's basically my version of Bitcoin, but the upside potential is so much higher. So for example, down here, the price here. So if you look on the very left, the very right here, this is the price. So the price down here was $2.40 a bit, $2.27 a Bitcoin. The top here was around $1,000 Bitcoin. Here it was $20,000 Bitcoin, and the top here was around 60,000 Bitcoin. Now, what's the top going to be here? I think personally the top is going to be around about here, the 120K mark. We could also already have top now because things have been really running so much faster and so much ahead of the game as usual, as normal. So now if we look at Bitmobick's price is all the way down here. Bitmobick's price is all the way down here. So it's around about this kind of area. That means we have all this potential gain. So if it's worth like 600 to 700 American dollars and Bitcoin topped at 60,000, it doesn't necessarily mean this is the Bitmobick is going to go to 60,000. It just means that the value that flows into Bitmobick can make it go up faster than that same amount of value that enters into Bitcoin here. So if $1 million of value entered into Bitcoin now, it's barely going to touch the price. The price is not going to move up much because there's already so much value in it. But if $1 million enters into a Bitmobick, it affects the price a lot more than what it does here because of the total amount of value that's in it. That's called the market cap. So now this is why I think this is something that's really stuck out to my mind a lot and has got me really intrigued with cryptocurrency in general. So this is a very new, this is very, oh, this is quite old. So this is from 2020, but it would be following the same trajectory. So this is comparing the world's money and markets. So you take one of these little cubes, is $100 billion of value. So silver has $100 billion of value. Well, it's less than, so that it's to scale. So half of that square, 43.9 billion. Cryptocurrency at this time, so in 2020, had 244 billion. Now it's over $1 trillion, well over $1 trillion. And I think Bitcoin itself has $1 trillion in it. And then you've got all these other coins as well. So that at this time there was 5,400. There'll be like tens of thousands now, which also makes it a lot more difficult to invest. So again, silver's like the lowest of all these assets, then cryptocurrency, and then military spending. I would have thought military spending was a lot more, to be honest, but that's still ginormous for such a negative impact on the world. The US budget deficit, coins and banknotes, as you can see, we're starting to scale up. Fed's balance sheet, billionaires. So this is the billionaires have $8 trillion. The gold, so this is how much value is in gold, and people are calling cryptocurrency or Bitcoin the digital gold. So it's all about, so the liquidity flow is all about where money's actually going. Where is money? It's going from this asset to this asset. It's flowing from this asset to this asset. So at the moment, gold for so many years was the store of value. Now people are saying Bitcoin is the digital store of value. It has superior properties as a store of value to gold. And I also sit in that camp. There's a lot of people who look at the literal material value of gold, but at the end of the day, if we're in World War III, I wouldn't be accepting gold for food. It's like, what am I going to do with that gold? I'm going to hold on to my food. So yeah, it's not that gold has no value, but there's other things that also perform the same task. We just give it, it's just whatever we've given it value. So at this time it was 10.9 trillion. Fortune 5. So this is the top 500 stock market in America. So this is the big five: Microsoft, Apple, Amazon, Alphabet, Facebook. And Alphabet's actually, well, it's Google and a few others. So yeah, 25%. And I think this is even more skewed. The tech companies are even more skewed in this direction now. So again, this is 2020. So this is the stock market. Look how much value is in the stock market. So again, look at how much value is in cryptocurrency, and then look at how much is in the stock market. So only one of these cubes, only just however many cube squares there are here, there's hundreds there, only one of those has to go into cryptocurrency to basically increase the value of cryptocurrency by 1/3, which increases the value of everything extremely high. Now, the money supply, then you've got the global debt, which is phenomenal. This is the amount of value. Then global real estate. Look at global real estate, man. That's huge. Global real estate. So this is what we get taught in school. Buy a house and you'll live well. But look at all the value that's in real estate. People park money in real estate. Imagine again, if some of this value in real estate, when people start to realize, hang on a minute, I don't want all the nuisance of owning property and I have to upkeep it, maintain it, deal with land rates, all of those other things, when I can just park it in here and the value can go up by other people also parking value in here, because it's really all about the mind set towards these assets. So why do we park it into global real estate? Because we think it has value. Should some random house in Australia be worth, like you look at Sydney property prices, an apartment, a single bedroom apartment is in the millions. I mean, that is absolutely insane. The reason why it's in the millions is because people park their money in real estate, and this is actually inflating the value of the real estate. So international investors will put their money into real estate, and this makes everything go up. So it's a bubble. It's a massive bubble. All these things are just gigantic bubbles. The only reason why they continue to go is because the Federal Reserve keeps printing money. We keep printing money, and then that money has to go somewhere. So it keeps going into these things. It keeps going into all these asset classes. And then this is the full global wealth. And then this is derivatives. Derivatives, which is the biggest scam of all. So this is basically, this is just what the whole banking system, I mean, look at this. This is what the whole banking system actually relies on. Look at how astronomically outweighed that is. So the banking system is just the biggest, complete, gigantic Ponzi on the planet. There's no way that there's this much value. It's all just derivatives. So it's all just fractionally reserved value of fractionally reserved value of fractionally reserved value. So it's just so obscene. None of this is actually real value. So what does that actually mean? This is where, again, only small portions of that value has to come into here. When you look at cryptocurrency in the scale of everything else, it's really, yes, it's risky. It's volatile. It's the volatility that makes it risky. That's what people actually fear the most. But why do we get taught to buy houses when, okay, 100 years ago, yes, sure, owning a house, but now, like really owning an apartment in Sydney for over $1 million, do you think that that's going to double anytime soon as an investment? I don't think so. I really don't think so. I think particularly with my generation and younger, they're going to wake up. People are wanting opportunities that the boomers had. And those opportunities are where all this fake printed money inflates all their assets. And how do you get that? It's when the asset value is low and then new money comes in and it goes high. That's how you get that opportunity. People also want that opportunity. I'm not interested in buying real estate for a 2x by the time I die. Again, 100 years ago, sure, where you can multiply your money by 5 or 10 times within your lifetime and you can pass that down to your children. But really, if you really think about that in the context of the global liquidity, is cryptocurrency actually the most risky asset class? I don't think so. It's certainly the most volatile asset class, but I don't think it's the most risky. I think a lot of the new money, a lot of the millennials, the Gen Zs, these people, the younger ones, when they start to wake up to how the actual value in the world is accrued, where it actually goes, they're going to start to want to look for opportunities that their grandparents had, because they're not going to get it in real estate. They're not going to get it by holding on to gold and silver. They're not going to get it by holding on to in the stock market or bonds or these kinds of asset classes. You might get it in cryptocurrency. It's very volatile. It's very risky. But it's, in my opinion, it's less risky, again, because your upside potential is so much higher. That's how I assess the risk. So that's just me. It's not financial advice, and that's why I'm very interested in Mobick and I'm interested in cryptocurrency at large, because the upside potential is so much higher. Then what can I actually do with that value? Where can I actually put it? How can I actually put it to work to produce more? This is the thing, and this is where entire decentralized financial systems, so for example, like on Pulse Chain, the Atropa ecosystem, this is where these things are actually being created, where value can actually be taken out of the system and put into the world and put to production into the world, and it can just keep this circular it's the same principle as the derivatives, but it's happening on a decentralized financial system now. This is the thing that people, they're not seeing it yet, but over time they will start to see it. And this is what my channel is all about, showing everyone this is actually happening and it's going to continue to happen. You can call it a scam, you can call it a bubble, but everything is a scam, everything is a bubble. It's really just about how the world adapts to it and adopts it. And in my opinion, the world is only going to continue to adopt blockchain because it is part of the future. The way that it's set up will actually be the pipelines for the future. So with that, thank you very much. Take care.